Welcome to the Maclendon Minute. The human brain can process 10 to the 16th power processes per second. This makes our brains more powerful than any computer in existence. So we should all be walking, talking savants, calculating equations in seconds, multilingual encyclopedias that consistently make logical decisions. Well, we all know that is not the case. Why aren't we always logical? Thank you, cognitive bias. A cognitive bias is a pattern of deviation in judgment where inferences about other people and situations may be drawn in an illogical fashion. These biases can derive from mental noise, emotional motivations, and social influence. Have you ever rejected evidence that contradicts your point of view, even if you know it's true? That's the backfire effect bias. Ever fallen victim to groupthink? That's the bandwagon effect bias. And I know if you are watching this, you are smarter or more informed and cannot understand the common man. Hello, curse of knowledge bias. So these biases cloud our ever-processing brains and can lead us to make the wrong investment choices. Here are a few examples of these biases. I want you to think, have I done this? Have I felt this way? Hindsight bias. I knew random stock X would make a run for it this quarter. I knew it all along. Of course you say that at the end of the quarter. When you have the hindsight bias, you have the tendency to see past events as predictable. It's the Monday morning quarterback dilemma. Investors get so caught up in hindsight that they lose sight of the bigger picture. It is easy to predict something after it's happened. Irrational escalation. Have you bought a stock that was a real dog? You have to make a decision. Do I cut my losses? The irrational escalation bias would say, no, let's invest more money in this stock even if you know it's a bad one. You justify the increased investment in a decision based on the cumulative prior investment despite new evidence suggesting that the cost of continuing the decision outweighs the expected returns. You are throwing good money after bad. Then there's overconfidence. Who needs an advisor? I can do this on my own, along with my full-time job, spending time with my family, hobbies, etc. Keep in mind, the professional fund managers who have access to the best investment reports and computational models can struggle at achieving market-beating returns. And that is their full-time job. We are too confident about our abilities, and that causes us to take greater risks in our lives. How can you really do your full-time job, manage your household, and be on top of all that is going on in the market? These are just a few of the many ways that biases can affect your investments. Understanding these biases exist and being aware that many investors fall victim to them will give you an edge and a fresh perspective. If you have questions about how to avoid biases, creating a long-term allocation game plan, or any wealth management topics, please feel free to contact us at 855-MAC-WEALTH. Thank you for joining us for this month's Maclendon Minute.